Right, this is a pretty quick trade recap. There's not a whole lot to go over here. So I'll just stick with the 5 minute. You can kind of get it all from here. So this is Sunday night open with the Iran news and all that. We gap up and yeah, we just keep going. So that's Asia, London consolidation. And then coming into market open, ideally what I wanted to see was come down here, take some of this liquidity, and then play for the upside. And if we look here, we have market open here. And this is New York open. We get an aggressive push. So this was this is pretty ideal. So we create this bearish BPR, this bearish BPR, and I was looking for invalidation. And to be honest with you, I just I think a lot of traders got caught in this trade where like you can be picky. So we came down, we did take this liquidity and we got this impulse candle up, but we didn't fully invalidate the 5 minute BPR. And this has happened to me before, especially it should be telling when we get this sort of level of chop, expect more of it. And I should have just sat and waited for full confirmation because as you can see here, I got wicked out on the next candle and I took another attempt here. I was still within my risk for the day because I sized down heavily. And my second attempt, yeah, I think this candle here took me out. And the thing is, if I just waited for my model, I was a little tired today. So here we go. If I got this inversion candle here, now we have a clear, like my target is still, like there's still plenty of room to breathe in this trade. Like the long would have been get tagged in and just give it some breathing room. Like you could use this inversion as a stop placement and maybe take 50% of this candle. You could be, because there's plenty of room to the upside here. And as you can see, it would have been a beautiful trade. Then once we got to that liquidity, we rolled over a little bit, not too much. And yeah, overall, you get the picture. So we just take a look at the daily here. There's no doubt in my mind, we have just now totally inverted this bearish order flow. This was this massive sell-off we had last Friday. As I said, this market is just crazy resilient. That we're going to go on back up now to take out all-time highs and continue at this point. There's nothing to say we're not. Again, we did leave this candle with no wick here and the new week opening gap. It could very, very easily be a breakaway gap at this point, and I don't even know if we're going to come back to see it, just given how strong this daily candle close is. I would like to see it push back into this, grab some of this fair value gap we've created, and see where we go from there. But yeah, it looks like it's up and away. They're signing the Iran deal, I think, on Friday, and I think that once that's really buttoned up, that's going to cause oil to probably go back to pre-war levels. Probably sub 60 is quite possible. If that happens, the Fed's worries of inflation are going to be greatly diminished, which in turn means with the new Fed chair, he's going to have a lot more confidence to possibly cut rates sooner than most were expecting. If we see these knock-on effects, expect the overall market to continue what it's doing, but really where you're going to see the value in the market is a lot of the growth. Tech growth has been, a lot of it still hasn't really turned the corner in a major way. So you're going to see a lot of the small caps. Crypto's going to go berserk. Yeah, we'll kind of see, especially just look at the crypto markets to get an idea, and take a look at Bitcoin, ETH, Hyperliquid, Zencash or Zcash, and see how they're performing, because they are the canary in the coal mine. And if you start to see us break significant structural levels on those charts, it could be an aggressive end of the year and into 2027.